get some more on all of this and what to watch out for now. Chris Weston joins us from IG Markets in Melbourne. Chris, good to see you. Now, this German Constitutional Court ruling, was this pretty much factored in to markets that the court would rule in favour of the ESM?
Yeah, I think it was. I mean, just looking at the price action, I mean, euro-dollar did trade up to, as you say, 129.37, pulled back throughout the session, attracted a few sellers. I mean, it's marginally down, just testing that 129 level. I think then you've got to look at the DAX. I mean, the DAX spiked up 1.4%, got up to 74.10, and again, just exactly the same. Anything euro-related traded in a similar pattern. It sort of found sellers through the day. German bunds found sellers, and that pushed up 10 basis points and attracted some buyers and some safe haven buying towards the back end of the day. But I think this is, to be honest, in terms of what we saw from the German Constitutional Court, this is as good as we're going to get. This was the most euro-friendly, equity-friendly outcome that we could have possibly asked for. There is a cap on any future German contributions. They are contributing 190 billion towards the stability mechanism, but there is low conditionality apart from that, and that's what we were expecting. We were expecting them to cap this 190 billion involvement, and any other external contributions on top of that will need to go through the Bundestag. So that's exactly what we expected, that we perhaps had a chance that there was going to be some further conditionality. Some commentators even speculated at a worst case scenario we could have seen a referendum on Germany's involvement in the European Monetary Union, although it was a low probability. So a little bit of relief around that. I think there's other things you can look at overnight, Bridie. I mean, clearly everyone's still looking at the Dutch elections. That seems to be going again in a more Euro-friendly scenario. Mr. Rutte, who's been the leading Prime Minister for some time, he's the head of the Liberal Party, and he seems to have had a one-party preferred seat advantage over the Labour team at the moment. So it seems that perhaps he's going to have enough votes to cobble together and form a coalition with the Labour Party and avoid having to team up with the far left or the far right, who have anti-austerity or anti-Euro beliefs at the moment. So that could be another good Euro positive. And then there was the Manuel Barroso, the head of the European Commission, who came out with his State of the Union address, and he's been talking some really good, positive, longer-term scenarios, talking about a blueprint for banking union, for a bond, and talking about fiscal union as well, something the Germans clearly will shoot down when they can. But a lot of that's going to be relayed, and his blueprints will be looked at in October. But I think that was good for the euro. We did see it taper off towards the end of the day. But I think in terms of equities, it was all about Apple last night. There does seem to be this ongoing thing with as goes Apple, as goes the S&P, and it was really good to see strong buying coming off that $656 per share mark, about 2% rally into the close, and it's obviously some very exciting days to be an Apple shareholder at the moment. But yeah, it was I think personally I'd be looking to buy dips on euro, but it was I think it's as good as you're going to get in terms of what we saw from the German Constitutional Court last night.
I guess, yeah, the focus now too, turning to the FOMC. What's the trade, I guess, given the high expectations that we are going to see some more asset purchases from the FOMC?
Yeah, look, I think this is clearly what we're going to see today. It's going to what keeps traders on their hands. You are right. I mean, there are high expectations going into this since Bernanke's grave concern comments that we saw recently. I mean, 65% of all economists who are polled by Reuters have suggested they expect QE3 to be announced. The trade then goes into more specifics. Are we going to see open-ended QE or asset purchases being announced by the Fed? i.e., are we going to see them coming out and saying, rather than explicitly give a set amount over a set time frame, we just want to see this, we want to do this on a monthly amount, and we want to tie this to economic performance of the US. So if unemployment spikes up, we want to add more liquidity, we want to get more aggressive with our bond buying program. That would probably be the best case scenario. I think probably about 30% of all those polled do suggest that we are going to see a fixed duration, a fixed amount coming through. But I would like to personally see, an open-ended project. I think that would probably be the best case scenario for risk tonight. But I think there are a huge amount of expectations built in. But I think probably the best way to play this, Bridie, is probably look to leave a limit in euro-dollar, for example. I'm looking around the 127.80 level now. There is a chance, even if they do come and announce a QE3 package, you could get the buy the rumour, sell the fact scenario, in which case you get that sell down, you're filled at better levels, and then that dollar should weaken over the course of time. And that's where you get the kicker back up to, what, say, 130, 150, which is my longer term target on euro dollar. So I'm just worried about the buy the rumour, sell the fact type scenario playing down. A lot of big expectations built into this, in which case you want to be looking to buy euros at lower levels at the moment. And I think that the real risk here is, given what's built in, is if we don't get a QE3 package, then again, you know, it's very technical. I mean, if we don't get one, but here it signifies that perhaps in December or January, then again, buying dips on euros is probably again the way to go there. The risk where we get a big sell-off in equity markets and a real big dollar strength, a big sell-off in gold and silver, is when Bernanke comes out, doesn't give a QE3 package as what is expected, and gives absolutely no clear indications that we're going to get one in December and January, and then we're probably going to see the start of a big sell-off, I think, coming through. So there are real risks, and clearly this is going to be a trader's market tonight.
And so what's the call then for today? What, traders just sitting on their hands ahead of that FOMC meeting?
Yeah, I mean, that seems to be the case. That seems a pretty logical mindset, to be fair. I mean, yesterday, I mean, it was quite interesting to see good buying on the open. I think a lot of the comments we saw from Premier when that they're going to meet their targets helped that scenario play through. But there's nothing in today's trade. I mean, the S&P was only up 0.2%. It's given us a pretty poor, tepid lead at best there. We're calling the market relatively flat. I mean, as a trade, I mean, the longer-term investors won't be overly bothered by this. I mean, they're still looking at the longer-term earnings pictures that's going to be coming through. But from a pure trading scenario, I mean, do you really want to go into tonight's meeting overly short stocks, knowing that if Bernanke really does appease the market, knowing that a lot of the tail risks in Europe are dissipating, and we get a 2% gap open tomorrow, you don't necessarily want to be overly short. But at the same time, if Bernanke does disappoint, knowing the expectations are pretty high going into this, we could see the market open 2% lower. So I think it's going to be just adjusting portfolios ahead of that. I think you're probably going to see people looking to sit in their hands. I think it's probably going to be one of those cases where the ability to react post the FOMC meeting, and you know, let's look at the time frame. 2:30, we actually get the statement coming out from Bernanke. I think about 4 o'clock, you get the actual Fed funds projections, their views on future inflation, future growth, and at 4:15 we actually get Bernanke coming out with his press conference. So that's going to be the order of play. I'm sure not a huge amount of people will be looking to stay up and do that overnight. So I think perhaps you can hedge out some of your equity positions with futures overnight, with that probably or currencies. That's probably going to be the way to go. But yeah, tidy ranges. I think BHP's ADR is looking very flat today. We do have Myer coming out with full-year earnings, so that could be quite interesting to see their idea on sales momentum going forward. We're looking for about 138 million in full-year net profits coming through, which is down about 15% on the year. But it's a day of sitting on their hands. I'd be very surprised if we saw strong volatility today.
Chris, great to get your thoughts as always, and yeah, looking forward to chatting to you throughout the session and tomorrow, of course, once we know what the FOMC has done. Thanks so much for that.